And welcome back to America's Retirement Headquarters, home of the Retirement Guys formula and America's Medicare Associates with Nolan Baker and Chaz Price. Scott Kirshner is off this week. 419-794-3030 is the phone number. So once again, 419-794-3030, the website arhq.com. Gentlemen, there was a survey from Charles Schwab that asked, what amount of money means that you're wealthy? The number came out to $2.2 million, but surprisingly, almost half of the people who had a net worth of $550,000, well, they consider themselves rich. Now, after COVID, people now place more importance on health and family. As a matter of fact, financial advisors are actually saying their clients aren't as interested in growing their wealth to $1 or $2 million. They just want to know if they have enough to quit work, if that's their inclination, and spend more time with family. So I have to ask, is this a trend that you're seeing? And what are some other trends that you guys have seen, some other retirement trends post-pandemic?
Well, I think with COVID and everybody getting locked up, spending time at home, it was a good time to get the board games back out and, teach the kids how to play euchre and other fun games that we played around the house. But, when I'm meeting with retirees and I'm talking with retirees, I think lifestyle is absolutely important. But I would say they still want to know what their number is, and they want to know if they have enough. And I think knowing your number is still very important to everyone. And I think a lot of people want to know what their number is. So if you're listening to the show and you're thinking, do I have enough? And what does my number need to be? That's exactly why you need to look at our independent income calculator, because within the independent income calculator, what we can do is put your numbers in there and it'll tell you exactly what dollar amount that you need to have today to make it last for what could be your entire lifetime. I met a couple recently. I call them Dave and Jenny. And when I was meeting with Dave and Jenny, they were just getting ready to retire. I was looking at the statements that they brought in from their other financial firm, and I noticed in the risk tolerance profile, it had them listed as aggressive growth. And I was thinking, wow, you're close to retirement time here. Are you an aggressive growth type of investor? We spend an hour kind of getting to know each other a little bit, talking about their goals and objectives. And they seemed like they had a pretty realistic expectation of what they wanted their retirement to look like. They wanted comfortable income. They wanted to, spend some time traveling to go see their kids, watch some hockey games, and have some fun. And everything that they described to me would describe them not as an aggressive growth investor. And so my concern about that is, if and when the market had a major downturn and they saw some big declines in their portfolio, when they transitioned into retirement time and they started to pull money off of those accounts, they could negative compound the account. They could accelerate their risk of outliving their money, as well as the fact, not only if that didn't happen, it's been my experience that when you have an investor in a portfolio that doesn't match up with who they are, those are the type of investors who don't have a good financial coach or somebody to kind of get them through the tough times. Those will be the type of people who abandon ship, when the market's down, ultimately selling, locking in those losses, moving it to a portfolio that seems safer, but then missing out on the rebound. So by talking through, and we went through this independent income calculator, Chaz, that you put together, and that calculator showed that they actually had enough money. They had the dollar amount that they needed. And so then I talked to them a little bit about, football terms. And if you think about a football team, and a football team is out doing great, if they're winning and it's the fourth quarter, what's the best strategy, right? You don't fumble it in the end zone. Mm-hmm. You play great defense. And so from their perspective, because they had enough money, we were able to show them that they didn't have to be as aggressive as they needed to be. They could be a little bit more defensive, maybe be a little bit more moderate or conservative with their portfolio, put some strategies in place that if and when the market had a major downturn, they didn't have to be down 30, 40, 50% like what the market happened to be.
Yeah, and I would imagine that aggressive risk tolerance probably came as a result of some previous, maybe a risk tolerance questionnaire that they took some years ago, certainly before the COVID crisis that we all experienced. I mean, talking kind of about trends, I agree. I think COVID did have a lot to do with just kind of resetting and making people aware of really what their priorities are and, where their pain points were. To your point that if I came into to 2020 an aggressive investor, sure, I probably had a really good experience the previous 10 years because we were enjoying the greatest bull market in history. Mm-hmm. But going forward since then, I think it's, like I said, cause people to really reevaluate what's important to them. Just thinking about losing 30% in 30 days. I mean, that's kind of what the COVID is known for, that drop that we experienced. I'm sure they don't want to experience that anymore. So that's been a trend. I think if people have become a little bit more conscious, a little bit more aware of the risk in their portfolio and some of the things and what do they need to do in order to mitigate those risks going forward. We've also seen where COVID-19 has kind of caused a consumer discretionary boom, I guess, in spending. Like you were saying, Nolan, people are finally able to get back out and do things. And we saw where travel, I think I saw where TSA helped and saw more than 2.5 million people per day during this 4th of July holiday. No wonder they're so grumpy. I mean, that's a lot of people going through those. No disrespect. I mean, I love my TSA people, but that's just a lot of people to see. And so it's kind of getting people back to spending time with family and focusing on the difference, in my opinion, between being wealthy and being rich. Rich, to me, really involves just having a big sum of money. But being wealthy is more of a mindset. How am I going to accomplish the goals that I want to do? How am I going to spend time and visit family, and how am I going to do the hobbies and benefit the children the way that I want to do? It's through income. And so we've seen this paradigm shift of just accumulating assets. The market only goes up to now, how do we actually live in retirement? Where are we going to get the reliable sources of income from? And, what do we need to do to decrease volatility in our investments? I think that has been definitely one of the bigger trends that I've seen. And then I think just that traditional approach to set it and forget it. Maybe, a lot of people that have traditionally done their own investments just did the 60-40 portfolio, buy and hold. That's really no longer an option, especially last year, seeing the market for bonds decimated. We're looking at, I'm seeing more people want to do actual financial planning. They want to see how it all fits together and what is their lifestyle going to be, not necessarily how much money do they need to have, because it doesn't mean what it used to, I think.
Yeah, I think, one of the other good trends when you mentioned more people wanting to do financial planning, I know one of the things that I've noticed in meetings that we've done together is you go on the flip end of the scale. So, sometimes you have people that'll come into the office and we'll look at their portfolio and they're really conservative in what their approach is. And when you go through the financial plan and you stress test the numbers, by being that conservative, it actually still shows that they have a high risk of outliving their money by being too conservative and adjusting what that risk tolerance is to kind of get it to match up to give them the highest odds to be able to achieve the outcomes that they're looking for is why it's so important.
Yeah.
Other trends I think that we see with the retirement space is people have decided to kind of work longer. Many people think the traditional retirement age is 65, but some people, tend to have improved health. They want to be more engaged and involved and continue to provide back and keep working longer.
Or they were forced to have to work a little bit longer because of the market's pullback recently.
Yeah,
unfortunately.
True. And, and then some of the people go through like a phased retirement. So, gradually going from a full-time to maybe taking Mondays and Fridays off, working 3 days a week instead of, just stopping work abruptly, phasing out that retirement. As we just talked about, lifestyle-focused retirement, shifting towards a more holistic approach that goes beyond just the financial numbers, focusing on factors such as health, wellness, leisure, social connections, personal fulfillment in their retirement plans. And this approach really kind of recognizes it. And that's the approach that we typically take, when we're working with our clients. As you mentioned, financial literacy, whether it's tuning into this show, listening to previous podcasts that we have or our YouTube channel, or coming out to one of our university classes or educational events, we see people really wanting to be involved in understanding how the process works. I know that's one of the big questions that we ask people when they come into the office is, can you explain to me the current process being used to pick out the investments? And, if they don't understand it, that's part of that process that they want to go through in understanding the methodology of what's being used by their financial firm. And doing so, I think, helps them become less likely to make those knee-jerk decisions to make a change at the wrong time, when they have better financial literacy. And the last one is they want a little bit of flexibility in retirement options, having it more customizable, seeking flexible options that align with their unique preferences and circumstances, and, looking at alternatives to full-time retirement, maybe the phased part-time work. So a lot of different choices, again, when you're looking at some of the new trends in retirement time and kind of putting it all together. So again, the bottom line is if you're looking for your flexibility and you want to know what is the number I need to retire on my terms, give us a call. We can put your information in our independent income system calculator, and we can help answer that question of what is your number.
Figuring out what your number is, figuring out how to make your retirement dreams into a retirement reality starts with that phone call, because at the end of the day, what is most important in your retirement is your number and how it's going to work for you. 419-794-3030 is how you set up a time to speak with them and start putting that pen to paper and start taking those steps. 419-794-3030. You can also go online, arhq.com. As Nolan mentioned there, you can check out previous editions of the show via podcast, via YouTube. Just go to Spotify, Apple Podcasts, wherever you consume your media. Go to YouTube, search for America's Retirement Headquarters, and all the previous episodes there for you to check out at your leisure.